Hi, everyone, and welcome to the Stefan Livera podcast, a show about Bitcoin and Austrian economics. Today, for episode 190, my guest is Rafael Schultze-Kraft. He's the CTO of Glassnode, and we're going to be exploring some of these questions around how many Bitcoins are being hodled, right? Because with Bitcoin, you can actually do some on-chain analysis and try to figure out how those coins are moving around. But first, a message on behalf of the show sponsors. So firstly, Swan Bitcoin. Swan is the best place to auto stack your Bitcoin in the US. It's so simple, even a no coiner could do it. Step 1, auto fund the USD from your bank account. 2, auto stack your Bitcoin. And 3, auto withdraw to your Bitcoin cold storage. Swan does not charge withdrawal fees. They want you to follow best practices and hold your own keys. Swan have cheaper fees than Coinbase or Cash App. Set it and forget. Just enjoy your life. Just Swan and chill. Go to swanbitcoin.com/Livera to start auto stacking with Swan today. Be sure to use the ref link, swanbitcoin.com/Livera, and you'll get $10 of Bitcoin dropped into your account. Have you looked into Unchained Capital? Bitcoin financial services delivered using multi-signature. You can set up a vault with yourself holding 2 keys, say one Trezor and one Ledger, and Unchained Capital can help you set up the 2 of 3 vault. And Unchained also offer loans as a product, so you can put up some Bitcoin and get USD without selling your Bitcoin. And it's stored on-chain, it's dedicated multi-sig addresses, and it's never rehypothecated. So go and check them out. They've got incredible content on their website, and if you need a hand with setting up, they can offer that also. So go to unchained-capital.com for that one. Next up, for my Australian listeners, did you know you can buy Bitcoin with your superannuation? With a Bitcoin-friendly, self-managed super fund, you can. New Brighton Capital have streamlined the process. It's fast, it's affordable, easier than you think, and you still hold your keys. So as long as you are comfortable making the investment decisions, New Brighton Capital looks after the accounting and reporting for the fund. They offer a free 20-minute consultation, and if you use the code Livera, you get a credit off the monthly fees. So go to newbrightoncapital.com. All right, and I'm just going to bring in my guest now, Rafael. Welcome to the show.
Thank you very much, Stefan. It's a pleasure.
Excellent. So, Rafael, you're the CTO of Glassnode. Can you tell us a little bit about yourself and a little bit about Glassnode?
Yeah, sure, of course. My background is actually in computational neuroscience. This is how I got into, data modeling, machine learning, data analysis, everything that can be sort of like grouped into the umbrella of data science. I've been working as a data scientist for the last 7 years, I think. And I co-founded Glassnode 2 years ago with my 2 partners from Switzerland. The idea behind it was what was born actually out of our own needs, right? We wanted to get hands-on good data as investors in this space, and we really pretty fast we settled on and focused on-chain data as a truly new kind of exotic data source that didn't exist before, that you can't find in the traditional markets, and where we actually saw very early on that it contains a lot of potential, a lot of information and insights for us to make better decisions. We started to build out Glassnode, where we now offer, I think right now it's more than 200 on-chain metrics that we serve through our platform and through our API. We recently started to expand into derivatives as well, as it sort of like goes into the realm of exotic data as well, but still focusing strongly on-chain metrics.
Fantastic. And I think it's a really interesting world because for someone looking in from the outside, it would be like imagine money going from bank A to bank B is not accessible on a public ledger, but in the Bitcoin world, it is. So what are some of the things that we can see and ascertain in the Bitcoin world?
Yeah, so I think one of the you're completely right? It's like imagine like an economy where you can actually see movements of cash from pocket A to pocket B, or from bank account A to B. And I think one of the beautiful things about Bitcoin and the simplicity of its design. It's UTXO based system, right? What this allows you to do is actually to really nicely look at each Bitcoin that lives on the blockchain by looking at how old this Bitcoin is, right? How old the UTXO is, and this allows you to compare and to value things based on the lifespan of a particular Bitcoin. Compare if it's being moved today, what is today's prices compared to when it last moved, and so on and so forth. So this actually results in many different metrics that you can build upon this idea of the UTXO based system.
Excellent. So look, let's set up a little bit of the background and the context just for listeners. Let's say they don't really know too much about how Bitcoin works. They might have seen, okay, I want to send some Bitcoin, and I scan the address and I pay some Bitcoins to that address. And then what's really going on there with the UTXO, and what's the way that you would then try to understand what's going on with that?
Sure. So the basic atomic unit on the blockchain is a UTXO, right? It's an unspent transaction output, and each UTXO holds a particular amount of Bitcoin, right? So as a user, as one that controls the keys of an address, what you're actually controlling is the accessibility or the spendability of a set of UTXOs, right? And because it is an atomic unit, when I send a Bitcoin, I'm actually spending the whole UTXO, independent of how much value it contains, right? It's as if I had a $10 bill that I'm giving you, even though I just want to give you $5. So I spent the whole UTXO that contains those $10 and get $5 back in return. And this is sort of like the similar concept when you think about UTXO. The UTXO contains a value that you spend completely, and you get some in return, and that return creates actually a new UTXO. So what this allows you to do is each UTXO was created at some point in the past, right? And whether this UTXO was created, I don't know, maybe this UTXO that I might be wanting to spend, whether it might have been created an hour ago or a week ago or 2 years ago, right? And so this allows for very, very interesting analyses in terms of what is going on chain and under the hood.
Excellent. And so another interesting thing that is perhaps to an outsider is not so clear is this concept of addresses versus entities. Now, I guess technically speaking, you send to an address, but you don't actually spend from an address. And this is kind of just like a mental, kind of like a model that block explorers have taught people, but it's not actually the case. It's actually you're spending from a UTXO, right? And so can you just tell us a little bit about that idea and then how you try to understand the difference between an entity and then the UTXO piece?
Yeah, sure. Of course. I think that's a very very important concept to understand. So if you think about Bitcoin, if you think about the network Bitcoin, one of the fundamental questions that you want to answer is, how many users does it actually have? How many participants are actually interacting with the network, or how many people actually own Bitcoin, right? How many are actually hodling? And this is a question that has been very difficult to answer, because what the approximation has been until now is simply to look at addresses. The problem with that, we all know, is that you can control more than one address, and there's also addresses that hold funds of multiple users. Think about an exchange address, for instance, right? And so what we set out to do was to come up with this concept of an entity where we apply industry standard heuristics, clustering algorithms, in order to identify which are the addresses that are controlled by a single entity. this has very very crucial implications on how you look on chain, right? So if you think about simple things like volume, right, on chain volume, and you're actually interested in real economic activity, right? I'm not really interested whether an exchange is actually moving right funds from one of their wallets to another of the wallets. That's I mean, yes, they have spent fees on to do this, but this doesn't really right account for real economic activity, right? So what we're interested in is how much of what is being moved on chain does actually change hands, right? And this is the way that we try to approach this. I think it's important to note that this is of course an upper bound of the amount of entities, which is an up subset of the amount of addresses. The real number might be much lower, but we're now much closer to the actual number than the actual addresses can tell us.
Excellent. So what can you tell us in terms of what are the entities that are out there, and how are you coming to some of these ideas around how many Bitcoins are being hodled?
Yeah, so I think what we try to do is not to look at the network as a whole, right? There's many metrics that just take the whole set of UTXOs and then compute some aggregate, some metric on top of it. What we really aim to do is with this concept of entities, and these can be known entities such as exchanges, such as miners, or unknown entities such as entities that have at least that are controlling at least 1,000 Bitcoin, which we then identify as whales. For us, looking at Bitcoin from a macroscopic perspective and really understanding, how much of all of these are holding how many Bitcoins, and what is actually the flow of coins between those different entities, I think can reveal a lot of very interesting insights that can have but potentially predictive power in terms of what is happening in the markets. The same holds for which are the ones that are short-term hodlers, right, or short-term investors that are sort of like showing this short-term investor behavior versus all of those entities that are more here for the long haul.
Yeah. And so how do you then distinguish between somebody who is, say, self-spending, right? So I guess there might be behaviors that a person does within Bitcoin that may confuse this kind of metric. As a quick example, it may be that they are maybe upgrading their storage. Maybe they had a single signature Trezor and now they want to put it into a multi-signature, and they would send all their coins out of their Trezor into their multi-signature setup. That might potentially confuse the metric a little bit. How do you try to account for that, or how does that work in your methodology?
Yeah, absolutely. I think this is one of the core implications of actually looking at not addresses but at entities, right? I think volume is a very good example. If an exchange is transferring or is creating a new hot wallet, right, this might actually add a lot of noise and actually false positives to many of the metrics that we might be looking at if we don't account for these kind of things, right? It's like me, putting my money from my left pocket into my right pocket. That's not real economic activity, right? So what you try to do is really account for these kind of things. So now that we know that a cluster of addresses is controlled by the same entity, we can actually adjust for that, right? We can say these in-house transfers, as we call them, we will just discard them, right? There's different things that you can do on top of it. We identify so-called relay addresses, for instance. So if I'm sending you a Bitcoin, then this might actually not go directly from my address to your address, but there might be an intermediary address that is a one-time use address that just receives the funds and spends them immediately, or within a couple of blocks. And if you don't account for these kind of things, then that kind of volume might be counted twice, right? And so what we have seen is that, and we published a report earlier this year that up to 75% of all the volume being moved on chain does not really change hands, does not really move hands. So that's all internally within the entities that are sort of shuffling their funds, or where relay addresses are being used, or change addresses as well, right? That's a big one as well. So if I get change back, but that change is actually going into a newly created address because that's the wallet's behavior, which most of those work actually nowadays, then we account for all of those, and then we can adjust the metrics, and not only volume, right? It can be coin is destroyed, SOPR, anything that is based on spent Bitcoins, we can actually adjust for.
Excellent. And so when it comes to Bitcoin on-chain transactions, would it be fair to say that a lot of the actual volume is inter-exchange? It's from one exchange to another. And so that's kind of there's like a lot of traders moving coins back and forward, and then I guess the other pattern would be people who are stacking, right? They're accumulating Bitcoins into their wallets. Would you say those are typical behaviors that you can see when you're looking on chain?
There's a lot of that. There's definitely a lot of that. We're actually now working on a metric that actually defines that, what we would call exchange dominance, right? How much of the volume is actually, either in-house exchanges. That is something that happens a lot, right? So one exchange moving their funds internally. The other one is intra-exchange, right? So really across different exchanges. And then everything that goes in and out, that accounts, and I can't tell you a percentage at this stage, but that accounts for a lot of what is actually happening on chain in terms of volume. Absolutely.
Yeah. And I suppose the headline number in terms of what we were talking about today, how many Bitcoins are being hodled, I guess the main metric there is how long are people holding for, and what are some of the ways that you try to assess that? So for example, you might look on the chain and try to understand, oh, see, this coin has not moved for 2 years, something like that, right?
Yeah, I think those are the very straightforward ways to assess the amount of HODL Bitcoins, right? You look at the age of all the UTXOs that have not been moved, for over a year, over 2 years, over 3 years. And those are metrics that are essentially based on the HODL waves, and those give you a very straightforward assessment of how much is actually been HODLed, right? And if you look at the current numbers, then you'll see that, right? All the ones that haven't been moved in over a year is currently at all-time high. I think 61% or so, which is quite a lot, right? And those that haven't been moved in 2 years is 45%, so almost half of the circulating Bitcoin supply, right? So 9 million or so haven't been moved in the last 2 years, which really shows you a really good indication of how much is actually HODLed. And of course, those are not the only ways in order to assess that amount, but that's sort of like, gives you a very straightforward and quick assessment of how large those numbers are.
Yep. And so that 61% figure and that 45% figure, how do they compare historically? And is that starting to reach a point in the cycle where you could arguably say this is a high percentage historically?
It is a high percentage. So the plus 1 year supply not spent is actually at all-time high, right? So roughly at this point is when the previous bull market started to go up, right? Which doesn't mean that the same will happen now, but I think that it gives you a very good indication of how how much confidence there is of a movement up from now on, right? Whether this is next month or in a couple of months ahead. I think there's a lot of investor confidence there. Same thing with the 2 years, right, which is currently at 45%, I believe. I think the all-time high is a bit below 50%. So currently it is increasing. So there is definitely increased hodling behavior that we're currently seeing on chain.
Excellent. And let's chat a little bit about the behavior of whales, right? So I saw you had a great post about this recently. You have defined whales as over 1,000 Bitcoins. And so can you tell us a little bit about what are the whales doing and how do you figure them out versus whale versus exchange?
Yeah. So I think the exchanges for the exchanges, we have a database where we over time we're capable of labeling addresses that are controlled by exchanges, right? That is in part that is public information, but a lot is actually based on heuristics and clustering algorithms that we apply internally. And so setting those aside, we look at all other entities that actually hold or they're controlling 1,000 Bitcoin or above, right? And those are the ones that we actually define as, whales that are controlling their own Bitcoins. And so what we've seen recently is that this number traditionally, has been going down. The number of whales over the last couple of years, since 2016 or so, has been slightly going down. And what we have started to see since this year is a shift in the strength of more whales actually appearing, right? But I think the more interesting part of all of this is that this is essentially what we've seen is that this is essentially inversely related to the amount of Bitcoins that is being withdrawn from exchanges, and it's not just that those are inversely related, but that we actually see that those Bitcoins are going into entities that hold that are essentially classified as whales, right? And that number is it's not increasing significantly, but it's a clear change in the trend, and so this is something that we're closely observing.
So, Rafael, if I understand you correctly there, could it be then that in the past, whales were leaving their coins on exchanges and now they're learning to self-custody? Is that one way to interpret that, or how would you interpret that?
It can be. I think that there is. It's probably too easy to just reduce it to that. But I think actually, or we believe that at least to some extent that withdrawal of funds from exchanges is potentially a setup of really confidence that they will be holding their coins for a large amount of time, in anticipation potentially of a bull market, right? I think potentially there's also a lot of education going on of people understanding actually that the keys that they don't control, that essentially means that it's not their Bitcoin. How to what extent this is actually the case with whales. In this case, I can't tell. There's potentially a percentage of that plays in there as well.
Sure. And also from your article, I noticed you were essentially spelling out that it looks like there are more whales, but their the amount of coins they hold is coming down over time.
Yeah. So it's more like there's more whales exactly, but those whales are smaller as compared to previous periods, right? So this is there's sort of like a slight shift. It's not a very significant one, but again, it's one that we're closely looking at in order to see where this trend actually evolves within the next couple of weeks and months.
Right. And I guess this stuff is quite interesting because there's the technical kind of quantitative aspects of it, but then you might have a qualitative thesis around that also. So for example, we should expect over time, just naturally, that when Bitcoin started, it was just Satoshi and Hal, right? So obviously it was very centralized in those days. And then over time you would expect it's decentralizing out. And so I guess this kind of aligns a little bit with that idea that we've got more whales, but each of them have less of a share of the overall pie of Bitcoin, right?
Yeah. I think there might be indications towards that, right? And you would hope that this holds, for the network as a whole. But then on the other hand, right, this very extreme hodling behavior that we're seeing really shows that there is simply a lot of confidence, a lot of investor confidence in future price appreciation, right? And that, of course, leads to investors not wanting to spend their Bitcoin. As if they don't want to spend it, then there's probably less chances for others to get into at least within the same amounts of Bitcoin. And what we see with whales as well is that to sort of like show the other hand of all of this is that, right? So we identified roughly 1,800 whales, and those are holding over 5 million Bitcoin, right? So there is quite some centralization within those big players, right? Which you can argue, well, yeah, that doesn't show this decentralization that we would want to see going forward, but that at the same time really shows this confidence in this big players to actually hold on to these large stashes of Bitcoin that they're controlling.
Great. Let's chat a little bit about coin days destroyed. So what is that,
Yeah.
and what does it mean if it's going lower?
So coin days destroyed is essentially defined as the amount of the volume of Bitcoin that is moving on chain multiplied by the days since those Bitcoins that are now being moved were moved last time, right? So as a simple example, if I have 2 Bitcoins today that I'm spending, and those 2 Bitcoins were moved last time 10 days ago, then coin is destroyed is 20, right? So coin is destroyed is really a nice metric that shows you the essentially when large stashes of old Bitcoin are being moved on chain, right? And so the current metric is essentially showing that this is very low, right? Which goes hand in hand with this narrative of people are hodling because most of what is being moved on chain is very recent Bitcoin.
Right, I see. So for instance, that would mean if coin days destroyed is very low in that instance, then it means it's only the recent coins moving, not old coins.
Exactly. It's not the old stashes that are being moved, but very recent Bitcoins, right? So there is essentially 2 components that go into coin is destroyed: the volume and the age of the Bitcoins, right? And those sort of like the interplay of those 2 is what makes coin is destroyed high or low. And so yeah. But if you look at the average lifespan of Bitcoins that are being moved, this is something that is very low as well. So coin is destroyed. The reason why it's so low is because it's very recent Bitcoins that are being moved and not old stashes.
What is hodler net position change?
HODLed net position change. Yeah, that is an interesting metric that was essentially put forward by Tour Demister and Adamant Capital a while back. And it is one that is related to to Coindays destroyed as well, and where the intermediary step is liveliness. So I think when we talk about HODL net position change, we first need to talk about liveliness. So liveliness is a metric that was created by Tamas Blumer a while back, and what this tells you is it compares essentially Coindays destroyed to all Coindays that have been ever created, right? It's a metric that oscillates between 0 and 1, and that increases as a lot of Coindays get destroyed, right? Which is sort of gives you a sense of how the vividness of a blockchain, or the how active it is, how lively it actually is, right? But another way to look at liveliness is from a hodler perspective. So as liveliness goes down, this means that that more coins are actually being hodled, because it means that less coin days are being destroyed, right? And so if you take liveliness, you subtract it from 1, multiply it by the circulating supply, you get to a number which actually tells you the amount of hodled and lost coins, which is currently at 7.5 million BTC, right? And that amount of hodled and lost coins, which is then moves essentially inversely to liveliness, because as a lot of coin days are being destroyed, that metric actually goes down, and as hodlers accumulate, that metric goes up. If you now take the monthly change of that metric, this is the net hodler position change, which actually gives you an indication based on Coindays destroyed and based on liveliness, how much how much coins are being hodled, right? So again, before we had how much supply hasn't been moved in X amount of years. This is another way to look at hodler behavior through this metric.
Yep. And as another aspect of all of these things is to look at also what the price was at the time these coins were moving, and then try to understand, are people sitting in a profit or are they sitting in a loss as well? And I understand you at Glassnode also do some of these sort of statistics. Can you tell us a little bit about that?
Oh, absolutely. And there's many of those that are very interesting. And one of the objections that I've been hearing about this HODL coins is that people actually saying, well, those are mostly investors that got in when at near the top, and so of course they're now at a loss, and they're waiting for the price to go up. But if you actually look at for instance, the supply that is in a profit, or the number of addresses that are in a profit, those numbers are currently, oscillating between 75 and 80%. If you think about it, like 75% of the supply is in a state of profit. If you compare, when the time at which the UTXO was last created and the price at that point and the current price, then that's pretty crazy, right? I mean, if all of those were to all of those people could be cashing out today, and they would be cashing out in profit, but they're not doing so, right? So I think this gives even more weight to this hodling behavior by really looking at the amount of supply, or the amount of UTXOs, or the amount of entities that currently are in a state of profit, and I think those are those are very bullish indicators if you put both of them together.
Absolutely. I think it's really phenomenal and just really fantastic to think about when you think that 75% of coins, of those coins, are in a profit, and they don't want to sell right now, even though they could. And I mean, there's all these other things going on right now. They could be selling right now, but they're not. And that's an interesting insight.
Yeah. I think there's a lot of that shows just a lot of confidence. People are really taking those opportunity costs of saying, I am confident that the price will actually see some appreciation, and that's why I'm not willing to spend my Bitcoin today.
Excellent. Also wanted to ask, what is reserve risk?
Reserve risk is a very interesting metric as well. Put forward a couple of months ago by Hans Hauge and Ikigai Fund. It's a very interesting metric, again related to Coindesk Destroyed. Deriving it is a bit complicated. A lot of nuances there, but let me try to explain it on a high level to give you the intuition. So if you look at Coindesk Destroyed and you compare it to the circulating supply, then Coindesk Destroyed most of the times is below the circulating supply, right? Or if you look at the value of Coindesk Destroyed, which is just Coindesk Destroyed denoted as USD, it's mostly below the current market cap. And there is only a few occasions where Coindesk Destroyed actually exceeds the market cap, and this is where we're sort of moving towards the top of market cycles. Now, the way to think about this, if you now compare market cap and the value of Coindesk Destroyed, is you can view this from the opportunity costs of an investor to say, I'm not willing to spend my Bitcoin or to sell my Bitcoin today, right? So the opportunity costs for me today would be $9,300 or whatever it is, right? I say I'm confident in a price appreciation, and so these are essentially the opportunity costs. Now what you do is you take the difference between market cap and the value of Coindesk Destroyed, and you create a cumulative sum over all the opportunity costs ever created across Bitcoin's history, right? This is what is called the HODL bank, and if you now compare if you now take the ratio of the market cap and the HODL bank, this is what actually gives you the reserve risk. And what the reserve risk really tells you is, how confident are investors that the price will appreciate. So if the reserve risk is low, means that the price is comparatively low, and hodler confidence is very, very high. So the risk reward ratio is very good. So these are essentially a really good points to get into entry points to get into Bitcoin, if you will.
Yep. And so looking at reserve risk where we are today, where does it sit, just for our listeners to get a rough idea?
It's very low, so it's very and it has been within the last couple of months. It has been very low. One of the reasons, of course, is because a Coindesk Destroyed is really so low, right? So all of these metrics, to some extent, are somehow they sort of like are related to each other, and we've been in this area of investor confidence for quite some weeks now throughout 2020. So it really shows that investor confidence is extremely high, and hodlers are expecting prices to go up from here.
Excellent.
On the long term, of course.
Yeah, of course. Looking a little into the future, imagining, let's say, more people started using, say, Liquid or Lightning, would that impact your ability to do these kinds of analytics? Or is it just, as in currently today, these Lightning and Liquid are a little bit smaller, and so you can't do it, like it's not going to impact your work as much. But would that impact your work in the future?
It will. I think it will. I think there is, as Liquid or as Lightning gains adoption, the dynamics of the chain will change, right? The people, the way people and users will be interacting with the blockchain will change. So I think right now in terms of metrics that are market related, and we've started to look into. We believe that the influence at this point is not very large, so it doesn't yet make sense. But I think as we see adoption within those second layer, then we might have to evaluate the impact of those with respect to to on-chain activity and what that actually means for the metrics that we actually offer and that we create, and the way we actually look at Bitcoin at this point in time.
Excellent. And so just, I guess, with Glassnode in general, what are some things that listeners should look out for in terms of things coming or things that you guys are sharing?
Yeah, sure. I think we're working on many exciting things. Many of those are actually related to really identifying, these different market participants or network participants when it comes to exchanges, miners, hodlers, whales, and really understanding on a more granular level what are the dynamics between those. How do they evolve over time? What is the flow of funds actually between all of those? There's just so many ways in which you can adapt these metrics and adjust for them in order to get a more and more clear picture of and better signals, right? Really, that separation between the signal and the noise from on-chain metrics. So this is something that we're putting a lot of effort onto, and I think there's from things that we're working on, a lot of really exciting stuff that is coming up within the next couple of weeks and months. And we usually release content and metrics on a weekly basis. So much more coming there within the next couple of weeks.
Excellent. So Rafael, where can listeners find you online and find Glassnode online?
Yeah, I think the best way, as it is in the Bitcoin world, is on Twitter. So at Glassnode, and for our company, and at Neocortex with a 3 instead of an E. For myself, just hit us up there, give us a follow, or just write us a DM.
Excellent. Well, thank you very much, Rafael. I really enjoyed chatting with you.
Likewise, Stefan. Thank you for the invitation. It was a pleasure to be here today.
Awesome. And listeners, you can find me, as always, at stefanlivera.com. That's it from us. We'll see you guys in the Citadels.